With Anish. Vaibhav Sanghavi is now with us. He's CEO at Ask Hedge Solutions. Vaibhav, good afternoon. Great to have you with us here on the program. I trust you heard some of what Anish Shah at Mahindra and of course leader at FICCI was telling Shireen on some of the expectations. I mean, your own thoughts, I think from a market perspective, what corporates are expecting is one thing, but I think from a market standpoint, stakes are high because we've rallied hard, we've done very well. It is a completely different scenario in terms of retail participation now as compared to the last couple of years. The higher you go, you start to wonder a little bit more as well. And I think the number one issue is taxation. Are you expecting anything at all, Vaibhav, or you think it'll be status quo?
Yeah, I think, from a taxation perspective, a lot of conversations are around your capital gains aspect. And also, around that uniformity of taxes, across investment vehicles. Now, if you see currently, each of those vehicles enjoy a different kind of tax treatment. Say, for example, mutual funds have a particular, fund base or a tax which is in the hands of the investor from a long-term and a short-term perspective. PMS is in the hand of the investor because it's a pass-through. AIF is at the fund level. So all of them kind of having different, system of taxation. So from a capital market perspective, we do think that if uniformity of taxation, the way it's being calculated and the way it's being charged to an end client, will go a long way in terms of developing the whole capital market reforms. That's on the one side. But on the other side, also there are a lot of conversations around the F&O market, and especially on the option side where there's talk of again STT kind of pulled up, or probably we have rather than on the premium you charge it on the notional value of the options and so on and so forth. So a lot of talk around different taxation, but at the end of it, it's currently all speculative, and probably we'll have to wait and see tomorrow how it comes forward from there.
Absolutely. And any tinkering, if it is not in sync with the market's mood, then we know what kind of an impact it can have. Vaibhav, good to have you in the conversation. But, that's really the next question. We are at very elevated levels, right? So potentially, apart from tax, is there anything else? Let's assume nothing happens on taxation, at least from a capital market standpoint. Is there anything else that could derail the party? How do you expect, let's say, life to be Wednesday onwards if there's nothing dramatically different on taxation?
See, if there is nothing dramatically different from a taxation perspective, my sense is basically looking at the budget and what the Honorable Prime Minister had to say today, ahead of the budget session, in terms of his vision towards 2047, and also laying a path for the next 5 years in terms of the policy direction as well. In all probability, I think the commentary is going to be pretty strong. So barring, or these taxation reforms, if nothing comes up there, then my sense is basically market will, have a sigh of relief. And apart from the normal kind of reaction to any of those budgets, I think we should continue the way we have been in terms of the market. Of course, as you rightly mentioned, Surabhi, right at the beginning, that valuations at the levels they are, any slight negative, from any quarters, I think can have a disproportionate reaction on the negative side as well. So, and it might be just normal and it might just be healthy as well.
Hi, Vaibhav. Good to see you in. It's been a while since we chatted. What about positioning ahead of this event? How have you all altered, say, your long-short book in the last few weeks? Because as you said, valuation-wise, we're not cheap, and we have seen a good run as well. So anything that, any kind of disruption could call for a sharper correction. Your take?
See, in our view, or as our thesis goes, or as our DNA goes, I think in a long short fund, when we are focused on absolute return, ahead of any big binary events, we are highly hedged. So at this point in time, if you ask me, we are close to about fully hedged in terms of our books. We don't take any call ahead of any big events. Let the event pan out, look at what's coming from there, what the outcome there, and then reposition our portfolios. But having said that, while we are extremely cautious investors because of our hedge mandate, my sense is basically, as I said earlier, at the level of valuation, the scope of disappointment is very, very less. If there is some amount of disappointment, then the correction can be pretty sharp.
Let me ask Prashant this actually. Prashant, so obviously this is all speculation. Hypothetically, if there's no bad news on tax tomorrow, then what? Just a relief rally, all-time highs once again.
I mean, how much? I mean, I think we were 1.5%, 2%
well,
away.
Just a 1.5% away from it. So another high.
That's possible, right? I mean, that's absolutely possible. But think about it another way. We were talking about the interim budget, which was presented in February. Now this is the full budget.
Yeah.
But now it's happening in July, which means
February. It's a 6-month budget.
Exactly 6 months. You'll have another budget, right?
Yeah.
So, would the government want to really do something big and dramatic in terms of, rejigging the entire taxation regime when you have a full budget in 6 months' time?
Yeah.
I think that is another thing to ponder. But I mean, if the taxation bit does not, I don't think there is widespread expectation it will come. Actually, I
think there's just fear-mongering, a lot of fear-mongering in the last couple of days.
Actually, if you had to sort of count the number of people, which you can't do, but I think it'll be in the minority. There are only few who are expecting something will come. The majority is saying, well, I don't think, but at the margin, of course, that the thing is always there. So maybe, as you say, maybe a little bit of a relief move, but we're almost there, right? I mean, the market's pulled back hardly anything. 1.5%, 2% or so. So who knows? Just a quick word, Vaibhav, on telecom as a space, especially in names like Indus Tower. Actually, Indus Tower, because I mean, others you got to take an individual call, but Indus, of course, caters to the entire telecom market ecosystem in that sense. I was reading a note from Citi, which is just out, and they're talking about the next leg of price appreciation for the stock. They're saying they're calling a price target of 500 rupees, lots of triggers, which will be positive for underlying telecom stocks as well. I mean, for example, the curative petition in the Supreme Court, tariff hikes starting to come through. They're expecting the company to present an update on tenancies, etc. Do you own it? Stocks up 100% this year, to be sure. Vaibhav.
Yeah, I think, Prashant, I mean, from a business opportunity perspective, from telecom side, I think nobody debates in terms of the long-term opportunity which is there. Till now, what has been happening is basically because of the high capex, the commensurate free cash flows was something which everybody was missing from the whole sector. Now that post-tariff hikes and in the whole ecosystem getting pretty healthy, my sense is that every decline or every dip, this is a sector which would be bid into or bought into. So while the business opportunity is fantastic, valuations are slightly richer compared to your averages, but as I said, just that because all the headwinds are out of the sectors, and now we are looking at some amount of tailwinds in terms of tariff hikes, and balance sheets can getting in proper shape by reduction of debt. I think this is a sector will continue to get constant interest going forward as well.
Okay, all right. Vaibhav, appreciate you joining in and filling us in with your quick take on the markets. Looking forward to chatting with you post the event. Well, for the time